Really good rally today. That's exactly what bulls wanted to see. The fact that stocks were up throughout the session. Bears really had nothing to do. There was no show from the short side today as equities held the bid throughout the day. Russell faded a little bit. Small caps, kind of what they've been doing generally. So it was a really good session. Here's what I'm looking for to change the lights around. If this is a bounce back or relief rally, or if it's a real beginning of the uptrend, I think it's a pretty tough call, frankly. But I'm not changing anything until we get to a few levels. So let's just go through the charts here and the levels that I want to watch, because we really are, I think, on the precipice of quickly turning around this down channel that we've been in. The S&P 500 has been making lower lows, lower highs. That's why the red light's been on there. That's your pretty basic definition of a downtrend technically. So that's what we've been getting. Drawing the lines loosely. If you draw them a little bit tighter, you can see that we're pretty close to getting out of the downtrend. That's basically, for me, for the S&P 500, if we can start making higher highs, which let's call it maybe 6,000, get out of this, get back to where we were in January, then the yellow light goes on. Then if we continue to push past and we start making meaningful higher highs, then the green light goes on around like 60, 40-ish or so. That's what I'm thinking for S&Ps. And that, I think, is pretty straightforward. You do have still a downtrend. You've made the lower lows. You've made the lower highs. We're operating within that channel. It's a pretty tight one, though, and it could be violated tomorrow. We could easily get out of it, and you can see the yellow light come back onto stocks and make it more of a range-bound trade instead of a downtrending one. I think actually one of the more compelling charts right now is in Tesla. This is probably the most bullish thing, I think, if you're looking for messaging from higher risk, higher beta assets, particularly given the size of Tesla, its role as a political play too in the market, given Elon's connection to Trump. There's so much in the market Venn diagram that overlaps onto Tesla, and so it becomes still a crucial company to watch, given the size, given the indications, and also the nature of it leading the market to the upside and the downside. If you look closely, this is a higher low, and this is right here a higher high. So you've potentially got this chart looking up. So I think it's one of the best things out there right now. Watch Tesla to see if there's some follow through. Today was a really big move. Tesla shares ramped 8%. That's pretty nice. That's pretty encouraging. I think that's probably the most bullish thing you can see in the market right now. So let's watch if Tesla takes the lead. If this was a fake out today and Tesla breaks down, then I think you're definitely on your toes watching for a broader market failure. But this still is a very important company, no doubt about it. For the 10-year for bonds, yesterday I talked about how the odds of the number coming in warmer were probably higher than the number coming in cooler. So I guess I did miss that. But the point that I was also making is that this entire move has been in preparation basically for this moment, which is stickier inflation than what people want, a less dovish Fed than what the market wants. And so as we calibrate that, it makes sense for a little pushback. And as I pointed out on the chart yesterday, the area I think that yields could probably come down to and still be in the uptrend, red light on bonds, would be about 4.6. That's also basically the area from back here that made some sense too in the last year of the chart at the old highs. So that kind of, I think, gives us a place to think about where bonds could rally further, get down to 4.6, but you'd still be in this uptrend. So it's going to take something, I think, pretty meaningful for the light to change on bonds. Maybe if we get down through into like 4.55, we start chewing through 4.6 to the downside on the 10-year, then maybe this is not an uptrend anymore. Then maybe bond bulls have a chance to stage a bigger rally. But right now, given the strength of the numbers, generally speaking, and the pressure on treasuries from a lot of different avenues, I think the bond bears are probably still in control. Tomorrow's retail sales print will be an important addition to that conversation. For crypto, I'm still watching MicroStrategy. I think it's an even riskier play than Bitcoin, just given the potential for zero downside in a company and not the coins. I'm watching this more closely than I am actually the chart of BTC right now. For MicroStrategy, I think that's basically $400, which is somewhere kind of in the meaty part of this range. If MSTR can get above 400, then maybe you are uptrending again potentially, and the red light would come off of the coins. I'll see you tomorrow.